For more on Google, we're joined now on the telephone with Richard Fetyko. He follows the stock for the firm Merriman Curhan Ford. Richard's got a buy rating on the shares. Richard, can we just call this a blowaway quarter for Google? I mean, we're talking about a company that's growing at 22% a year. Total run rate, what are we talking about, 30 billion?
That's right. By far the largest online media company. Close to 30 billion in projected revenues this year and still growing at 20-plus rate. Yeah, it was definitely a blowout quarter.
Now, some of the things that Dominic Chu was talking about with the non-search results, they seem to be really coming in ahead of schedule. What about non-search performance?
Yeah, I think that was a bit of a surprise for everyone on the call, is that they've broken out the mobile business being at a billion-plus revenue run rate and the display business at 2.5 billion annualized revenue run rates. Basically, these non-search segments are now representing 10% of total revenue. I think it's coming on faster than anyone expected, and so that's certainly contributing to the growth.
Richard, they also talked about, the cost per click actually going up. It seems that companies are loosening the taps a little bit. They're spending on online advertising.
Yeah, I mean, it's reflective of the consumers' great increased appetite for shopping in general. If consumers are shopping, the advertisers will court them and be willing to spend more. If the conversion rates or the increase in sort of overall consumer spending is there, they'll be willing to spend more as well in terms of advertisers. But most of the growth and the upside in the quarter came from just the pure volume of search queries that continue to come in, and that's a reflection of, I think, just secular trend in online web usage, and that will continue, in the foreseeable future. So we should see some increases in price per click or pricing of advertising, but the query volume is quite surprising, and I think that's partly driven by the adoption of mobile devices like smartphones, which tend to have 2 or 3 times higher web usage and search usage than the PCs.
What does this tell you about mobile advertising in general? Because, Apple's trying to get into it as well. Does this mean that that's the sweet spot right now for growth in advertising?
Well, it's going to be... it's going to be a big venue for advertisers, although mobile display itself is going to have a slower adoption than what the way that Google is benefiting from mobile adoption and smartphone adoption is really still from their search core business, which is people are using their smartphones and soon more and more tablets to go on Google.com and search, right? It's not necessarily mobile ads, but they're still benefiting the Google search business. But I mean, mobile, as with the acquisition of AdMob that Google has completed, and Apple's positioned to benefit from that as well. That's going to be a big venue and an advertising channel in the future.
Richard, last question. What do you think the stock is worth ultimately?
Well, our price target's been the $600 to $650 range prior to today's earnings, and we'll be revising our numbers, and we can talk about it in future. But clearly, their numbers are ahead of everyone's projections, ours, and the consensus.
All right, we look forward to getting those revisions from you. I want to thank you very much, Richard Fetyko, coming to us from Merriman Curhan Ford.